Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Wednesday, July 8th. Firstly to the S&P 500, and here we see very strong selling coming into the market once again. A very large black body candle, very similar to this previous black body from the 29th of June. This candle has extended deeper into the yellow highlighted zone of support, and very important support coming up for this market at 2040, the bottom of the zone. If the market breaches through there in a bearish manner, we could see further downside, initially down to the 2019, and then we'll be watching the round number 2000 to hold up as quite strong support. Any rally off this area, and there certainly could be a rally, despite the strong selling and the sellers being strongly committed and the strong control that they've got, any strong rally may find some very strong resistance at the Tenkan-sen indicator, which is now just at the top of the yellow highlighted zone. If we look at the previous time that we saw such a large candle, as I've mentioned very often the large candles are extreme days, and we tend to see the market either relax, consolidate, or some indecision enter the market, or retrace to a certain degree, and that's what we saw previously. There is a likelihood of that occurring, but what we need to do is just be patient and wait until the market perhaps interacts with the 2040 level, or until the next candle develops. Moving next to the Dow 30, and this is very different trading than we've seen with the S&P. This market is trading down below that yellow highlighted zone of strong support. If we look down, extending it just a little further down through the 17603 level, that area was taken out today in a very bearish manner, and importantly the 17536 level was taken out in a very bearish manner. As I've mentioned, with this being a very large downside day, there is an opportunity here for some buying coming back into the market, but we should be watching the low very closely, watching the low of this previous candle, which is at 17465, to hold a support. But if we do breach down through that area early in the market in a very bearish manner, then we could see the Dow trading down to the 17350 area. Next to the Nasdaq 100, and strong selling in this market as well. Certainly not as large a range candle as we saw with the previous indices, but importantly interacting with the bottom of that highlighted zone of support. 43.47 is going to be very, very important trading activity over the next day. The market just tested to there and backed off slightly, with the sellers still in control. Very strong downtrending price action now. We saw the previous breakout down below the Ichimoku cloud. We've seen a retracement and now some strong follow through. A lot depends on how the market reacts to this 43.47 level. If we see strong follow through down through here, we'll be watching 43.08 to 42.80 to hold as support. And to the Russell 2000, and in this market as well, very strong negative trading. We have now a close down below the Ichimoku cloud, giving us a bearish market in all three timeframes. Looking at the Tenkan-sen indicator here, it is pointing down very sharply, reflecting strong downside momentum. Any rally to the upside is likely to find strong resistance around the 1243 level, with the cloud trading around there. Any continued downside is likely to see this market testing down to 1220, and then perhaps down to 1212. Just below there we have a window that was opened up previously, and that may provide some strong support for this market, and has been an area of strong support in the past, in March earlier this year. And just taking a look at the bands here, and these are one standard deviation Bollinger Bands, and what I like to see to confirm trends in the medium term time frame is strong bearish activity down below the bottom band for a bearish bias, or strong bullish activity up above the upper band for a strong bullish bias. And here we have very strong trading down below the lower band. We had something of a squeeze going on here previously. We saw a bearish breakout, a lack of follow through. We saw the market retrace back up towards the bands, and very often when we have that transition away from this indecisive type trading, this sideways type trading, we see the markets break out and then find resistance at that bottom band and then sell off again. And that's what we've seen today, and this is suggesting that the bias in this market is very strong to the downside. A lot will depend on whether we see some strong follow through. If we do see a retracement back to the upside, the lower band at roughly about 2071 is likely to hold as some strong resistance for this market. Each of the other markets is really no different in this regard. They're all displaying the same characteristics with the bands, with the previous bearish breakout, the rally to the bands, selling off once again. This is the Dow 30. This is the Nasdaq 100, and we see the strong bearish activity below the lower band. And here we have the Russell 2000, slightly different, where the market actually rallied further into the bands, but still expecting that if there is a rally and we don't see the follow through, that we're likely to find strong resistance at 1249 at the lower band. Next we'll take a look at the sectors and some of the sector ETFs and comparing them on a relative strength basis to the SPY ETF, which is the S&P 500, the overall general market. And firstly looking at the financial sector, and here we see bearish activity down below the Ichimoku cloud on a relative strength basis, now strongly underperforming the overall market, and momentum of that relative strength is trending down. If we look at volatility here, volatility is trending up off a cyclical low, and it means that we certainly could see further downside in this sector in terms of trending price action. The energy sector here is very weak. XLE is the ETF, and we see very strong bearish activity down below the Ichimoku cloud. Each of the indicators, bearish in all three timeframes, has been a strong underperformer against the overall market for quite some time and continues to strongly underperform. In terms of volatility here, volatility is trending up and it's manifesting itself as very strong downtrending price action. Today, very strong selling, large black body, potential support around this swing low, which is just below where the market's trading at the moment, 71.82. XLK is the next ETF, sector ETF. That's the technology sector, and we see strong activity below the Ichimoku cloud. Each of the indicators supported by the Chica span. Relative strength comparative is very strongly trending to the downside, down below the lower band, strongly underperforming the overall index. Certainly not where the money has been flowing to, and the sector that funds have been flowing out of, as we have seen with the other sectors. XLU, the utility sector, which is something of a safe haven sector, and here we've seen the funds flowing into this. We have a change of trend in the medium and fast term timeframes, and the market trending up, but still below the Ichimoku cloud. If we look at the relative strength here against the overall market, strongly underperforming previously, in the last couple of days outperforming, and even though we have a candle that hasn't continued the trend to the upside, and it's a fairly weak candle, we still do have outperformance against the S&P 500. Momentum of the relative strength is trending up, and if we look at volatility, no good sign here in terms of volatility. We perhaps inform a cyclical low, some trending action, but not yet, and a lot will depend on how the market reacts over the next day. But we certainly have seen a reallocation from those other sectors into the utility sector, which is something of a safe haven. XLV, the healthcare sector, was one that was a strong outperformer in the recent past, had been trading above each of the Ichimoku indicators. For today, we've seen the market trade to within the cloud, and so we've seen a change of sentiment in that longer term time frame from bullish to neutral, and there is an opportunity here for the sellers, if they're strong enough, to trade to the downside. So what we'd like to see, if we are going to see continued downside, would be a bearish breakout and then continued bearish activity. Previously we saw a bearish breakout and we didn't see any strong follow through. Previously we were trading outside of the upper band, just trading within the band, so some outperformance but not strong, and certainly a sector here where there's been a flow of funds away from. Next to XLI is the industrial sector, and very strong downtrending market in all three timeframes, trading below each of the Ichimoku indicators. Relative strength comparative represents very strongly underperforming the equities market. If we look at volatility here, trending up very, very strongly and suggesting we have very strong downtrending price action and a very real possibility of a continuation of that. So flow of funds out of this sector has been quite strong over the last at least month or so. XLP, the consumer staples, which is something of a safe haven as well, has seen relative strength comparative trend up and is performing very solidly, probably one of the most solid performers here. Momentum of relative strength is trending up very, very strongly. For the prior day's trading, we saw the very large white body candle. The funds have been flowing into this sector away from the others. Today, something of a weak candle, trading down below the Ichimoku cloud still. Potential support around the Kijun-sen, Tenkan-sen 48.37. Not a good sector to be looking at. If we do see a bullish breakout up above here, then it certainly would highlight that this is a sector to be looking at as something of a safe haven. But strong resistance overhead around the 49.78 region, very close to the $50 round number level. XLB is the material sector, very strong downtrending price action, very dynamic. Each of the Ichimoku indicators are pointing down very sharply, as is the Chiká span, representing very strong downtrend. Sellers strongly in control. Relative strength comparative shows a very, very weak market in terms of the underperformance against the overall market. Funds are strongly flowing out of this sector and continue to do so. Volatility is ticking up very strongly and suggesting that we could see continued downside. And finally, XLY is the consumer discretionary, a moderate market here in the big picture terms, trading within the Ichimoku cloud, so neutral. Possible bearish breakout if the selling does continue. Previously we saw buying coming in here, very weak buying however, but in terms of relative strength, just outperforming in a strong manner, but certainly outperforming the overall market, and a sector that we have seen a flow of funds into. Just looking at some of the asset classes here, and SHY is the 1 to 3 year Treasury bond fund, and representing the bond asset class. Here we see a strong flow of funds into this asset class, strong relative performance against the S&P 500. Strong resistance overhead potentially for this market here, however, and just around the $85 level. Very bullish candle for today, and a lot depends on whether the market can breach up through this area. TLT are the longer term US Treasury bonds, and here we see strong outperformance coming into the market and continued from the previous couple of days. There is an opportunity for the market to continue trending up, but it may find strong resistance around the bottom of the Ichimoku cloud, about 122.27. We do have a bullish market in the medium and fast term time frames, but still bearish in that longer term time frame, and this suggests that the flow of funds certainly has been into the shorter time frame bonds as opposed to the longer time frame bonds. The gold ETF GLD is still strongly underperforming, or still strongly trending down in all three timeframes. Attempted rally today, finding resistance at the Tenkan-sen indicator. No real strong outperformance or underperformance here. The Vanguard REIT ETF VNQ is the real estate sector here in the US, and we've seen the market trading up through the Kijun-sen and the Tenkan-sen, the Kijun-sen holding a support, strongly outperforming over the last couple of days. Potential for this market to trade higher. There is some flow of funds into this asset class, but potentially strong resistance around this 79.63 level with the previous swing high and the Ichimoku cloud around that area. And VEU is the World Equities Index. ex the US. Strongly underperforming the US equities market. Flow of funds from here has been very strong downtrending price action in all three timeframes. Volatility is trending up very high, but getting up very close to or above most of the major cyclical highs that we've seen in the recent past. So it wouldn't surprise to see something of retracement or some congestion. No sign of that yet, but looking over extended in the depth away from the Ichimoku cloud and away from the Kijun-sen and the Tenkan-sen. And the Global Infrastructure Fund here, IGF, shows very strong downtrending price action, very strongly underperforming the overall US equities market. Volatility is trending up very high, getting close to a cyclical high here, so it wouldn't surprise to see something of a retracement sooner rather